Hey crypto chads and Olive's mum. Welcome to TA Basics. So today I'm going to go through some of the very fundamental indicators that you need to do some technical analysis for crypto and for shares. I actually don't think you need any more than this. I feel like people overcomplicate TA with patterns and all this stuff. I just think this is all you need. So keep it simple. Right, now when you're in uktradingview.com, you need to figure out what you want to do technical analysis on. So let's say we want to do technical analysis on Bitcoin versus the dollar, or against the dollar, sorry. You would type in BTC, USD, and then you can choose the different exchanges. Let's just go, you can pick anyone really. Let's just go for Coinbase because it's got a long history. Okay. And at the top here, you have the different time frames. So depending on how you want to do your TA. So if you want to do a TA over a longer term, you would obviously look at the monthly, weekly, and daily time frames. If you want to do leverage trading, or if you're doing trading day to day, then obviously you would look at the 15-minute to the 4-hour candles. You could even go lower than that. But to keep it simple, let's just focus on the weekly and the daily time frames. Right. The next thing that you need to understand is, what do these candlesticks mean? So the simplest explanation is, a red candlestick is when the price starts higher and ends the day lower. Day or whatever it is. In this instance, it's weekly. So so for instance, this candlestick, it started this week at 40,000, but it ended the week at 31,000. Okay, so that means the price went down that week. Now here you can see the price started at 18,000, but it ended the week at 23,000. So it's a green candlestick. Okay, so green candlestick is good, red candlestick is bad. Right, I'm going to be showing you 3 indicators, and that's all I use. I use 3 indicators. I don't use any more than that, and I've been very, very successful at trading just using these 3 indicators. Okay, I don't go beyond that. So the first indicator is the moving average. Okay, the moving average is basically just the average price between all of these candlesticks. So it removes all this this noise and just shows you a line of price. Yeah, a moving average price. Now you can learn more about this, what it actually means, all the algorithms. To be fair, it doesn't matter. The reason why these things work is because everybody else is looking at them. That's the only reason why these things work. Okay, so how do you add an indicator? So you'd go into here, indicators and strategies, and you'd put in moving average, and then you would include 3 different moving averages. Okay, so I use the 200, which is the big one. Okay, that's like the last line of defense for the price. You've got the 20 and you've got the 9. Okay, everybody has their different strategies. I use those. I also use 100 and 50 and 30 and all that stuff, but for the purpose of keeping it simple, let's just use 3, 200, 20 and 9. Okay, the fundamental principle of a moving average is that when the smaller time frame moving average goes over the larger time frame, that's when the price goes up. And when we get the inverse, so when the lower time frame moving average goes below the larger moving average, the price goes down. Okay, that's all you need to know. This is the 9 moving average here in blue. This is the 20 in white, and this is the 200 in yellow. So if you look at the smaller moving average, when the 9 moved over the 20, we had the price bump up, and then when we had the 9 and the 20 move over the 200, look what we got. So we went from 8,000 all the way, let's go back, look where we are, to 64,000 at its top. And look, we still haven't touched this 200 MA, and this 200 MA, at some point, it will come back down to retest it. People think we'll never touch it, but the truth is, as Bitcoin price goes up, this goes along with it anyway. Okay, now if you look at this, so if you just bought Bitcoin here, okay, this is a really good case, and let's be honest, I actually did do this. Where if you bought Bitcoin here, okay, look at the profit that you would have made if you just waited until the next def cross. So the def cross is when the lower time frames move below the larger time frames, and that's when you want to sell. Okay, so you got it here on the smaller time frames. So when the 9 moves below the 20, there's a price crash, and when you have the 9 move over the 20, which looks like it's about to happen now on the daily, you have a price increase. It's as simple as that. So you can look at it all the way through all these different moving averages here. When the 9 moves over the 20, price goes up. When the 9 goes below the 20, price goes down. When the 9 goes above the 20, price goes up, yada yada yada, and on and on and on and on. This is a really, really powerful indicator, so keep an eye on it. I think you should use this indicator with everything else, but it is something that you should definitely have in your portfolio. Right, so the next indicator that I want to be looking at is the MACD, another favorite of mine. So let's just shove in the MACD here. Okay, same principle. So MACD is a momentum indicator. Again, if you want to know more about it, go online, watch videos, whatever. I'm not going to explain it to you here. I'm just going to show you what it does. Again, same thing. So when the lower time frame here, so moves over the larger time frame, price goes up. When it crashes down, price goes down. Now the great thing about the MACD is actually usually these MACD crosses before the MAs. Can you see here? So the MACD here, the lower time frame went over the larger time frame before the moving average did. So this is actually a good indicator. So here again, see the smaller time frame went below the larger time frame, so it indicated the crash before it actually even happened. Yeah, so it's a very, very powerful indicator as well, and you should use it with this. So firstly, you would look at the MACD, and that will give you the first signals, okay, of when something could happen. Now, it might be a fake out. A lot of the times, what you want to do is you need to wait for a full cross here. Okay, so don't, just because something starts to curve up, don't just start putting in a trade. What you want to do is you want to wait for a full committed cross, and then that's where you want to start thinking about putting in a trade. So here, it crosses here first, then it crosses there. Crosses here first, then it crosses here. Yeah, so again, this kind of predicts the future of the moving average. Really, really powerful, really powerful indicator. Now, third one, and if I'm not trading, all I do is use the RSI, the Relative Strength Index. That's all I use. Okay, so again, go to Indicators and Strategies, type in RSI, click on it, boom, it appears. Okay, depending on the time frame, the indicator's stronger and they predict things better. Okay, the shorter time frames, things are far more volatile, but the longer time frames, they usually work out pretty good, or there's a higher probability that they're going to work out to your advantage. Okay, so let's look at the RSI, and RSI is absolutely beautiful. So let's look at the RSI on the, let's look at it on the weekly actually. Yeah, so all I do because I don't really trade much, and I just buy, add, buy, add. So I wait, I put in a trade, or I buy something, and when the price goes to a good level, I buy some more. When it goes even lower, I buy some more. When it goes even lower, I buy some more. Now, I only do this with good companies or good crypto. I don't do this with everything. With volatile crypto, I generally don't do this with. But it is, dollar cost averaging is the best strategy that you can do. All this technical stuff really means nothing. The richest men in the world don't do any of this. They just buy and buy and buy and buy and buy. Now, look, the rich guys don't do this, okay? What a lot of these traders will tell you is that they're winning. The truth is, if you look at their earnings or profits at the end of the month, they're not really earning that much. People that average down always do the best. And I'm telling you that. People will tell you they're doing really well in trading. Most of them aren't, okay? 99% of people aren't good traders. And if you even know technical analysis, you don't really use it that much, because you know dollar cost average is so much better as a strategy for long-term holds. But obviously, knowing TA really gives you an insight into exactly where the market could go. So it's also a very, very powerful tool. So let's look at the RSI before I go off on a tangent. So let's just say, okay, this is very hard to see because Bitcoin's just been going on a massive bull run. So let's go back a little bit. Okay, so in the bear market, all I did was every time the RSI went below 30 or at 30, I bought Bitcoin. That's all I did. That's all I did. So let's go back to the last price rise, sorry, at I think it was 20k. So this was the last bull run. Okay, so the price went all the way up to 20k. Okay, and within, you know, what was it? Within a couple of months, it crashed down to 6k. Okay, so the crypto is violent. So don't think it owes you anything. It will crash. When the bear market comes, you're going to lose a lot of money if you don't take profits. Trust me, you will. Okay, it does not go up forever. What people do is when the price is going up, they don't want to take money out. They only sell when it starts crashing. What you want to do is as the price is going up and the RSI is hitting over 90 or over 80, let's be honest, when it comes to crypto, they can go to over 90. In stocks, I would say over 70. That's when you start taking some profits out. And then when it dips again, below 30, you put it back in. Yeah? So let's look at Bitcoin. So if I just bought every time it hit these levels. So let's say, for instance, I actually bought here, but I averaged down, okay, here. So can you see here? The RSI hit, sorry, let me just make this a little bit clearer. 26, okay, and that was what, about 6,000, right? Again here, again 6,000, right? So let's go up again now. Let's go forward a little bit. Again, now this is the bear market, so the price is obviously going to stay very, very low. Now again here, when the RSI is at 10, here it went to 3,000. I added some more. Right? When the RSI is like at these levels, you know if it's a good company or a good crypto, it's going to go back up. It may be for a short term, but you know if it hits those levels, it's going to go back up. Because look what happened. It went from 3k and then the RSI went from, what is it, like 9 all the way up back to 86. And 86, or let's say actually here, was about 8,000. Okay, 3,000 to 8,000, and again, as the bear market here, it stayed low. Here again, RSI at 15, price 3,000. So you just add every time it hits those levels, and you do this also in a bull market, because in a bull market, obviously, the price keeps going up and up and up. In a bear market, the price just goes down, 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 down for a long time. So they're both bull markets and bear markets in crypto has lasted for about 3 years. Usually in crypto, they start the bull market starts 6 months after the halving, and it's kind of worked out pretty much to a T. I'm not sure that's going to happen every single time because it's going to be a little bit too easy, but that's what usually happens. Again, look at this. Oh, that's what I said before. So here, as you can see, Bitcoin went up from 3,000 and it went up to 14,000, and then it went down to 10,000, and here, and the RSI dropped. Okay, so all you need to do is buy it when the RSI is low. Here, I made a video here when the RSI hit 30. I said, listen, we're going to have this. It can't go any lower than this because the RSI is at 30, and that will be our savior. And look what happened. It hit 30, bounced up. So it hit 47,000. I actually did. I also thought there was a possibility that it could go to 43,000. That's for other reasons. I'm not going to go into that right now because it gets a little complicated. But if you just bought here, yeah, when it hit 30, boom. Now it's back up to, what is it, 54,000. Yeah, I'm not saying that it can't revisit these levels and it can't go lower, but just for quick. But if you just buy every time it's at these levels, it's a good buy. Now, for Bitcoin, I'm not buying any more Bitcoin at these prices, okay? Now, I was buying it here in the bear market, you know, for these prices, for 3,000, 6,000, 8,000. I am definitely not buying Bitcoin at 54,000. So that's why I buy things like Link, Dot, and coins like that. And obviously, they have the same fundamental strategy, okay? So let's look at Link, USD. Coinbase. Can you see here? When it hits 28, it bounces off. Whenever it hits these lines, usually it bounces off. So link went from, where is it? I don't know. It was really low. It was like $3 all the way up to $20, and then it hit 30, and that was the price at $7. So let's say if you bought at $7, right? Now look at it. It's at $47. Yeah, so if you just buy at these levels, it's absolutely perfect, and it hasn't actually revisited these levels again. It will do. It'll come back down. Don't worry. It will come back down. I'm not saying it's going to come back down to $7. I don't think we'll ever see a $7 link ever again. But that is where you want to be buying when the RSI is low, and you want to be selling when the RSI is high. I'm not saying you sell everything. You just take some profits out. Okay, and you wait for the dip, and then you buy some more. So another thing to understand is if you look at Link, actually, look how perfectly it bounces off the 200 MA. Yeah, like I said to you, it's the last line of resistance. Let bounce, bounce, and it hasn't retested it since. Yeah, so if you, and again, this could be a place to buy as well, and that's, you know, I always say buy at the 200 MA as well. So it kind of converges together. So when it hit the 200 MA, RSI was also here at 30. Yeah, and again, when the, you know, it hit the 200 MA here, and as you can see here, it hit the 200 MA, but the candle wicked above it. Now when you see these wicks, all that means is the body of the candle is above, perfectly above the 200 MA, right? That means the main price action was actually above it. Yeah, and then look, bounced off, and look, that was at what, $11 or $10. Again, you had another perfect chance to buy in, and boom, and it hasn't stopped since. Yeah, and look, this is going to keep going up. This is going to keep going up. So keep that in mind. So RSI, MACD, moving averages, right? That's it, guys. That's all you need to do. As you can see now with Link, I put in a trade here. As soon as the daily MACD crossed, put in a trade in, and that's worked out well for me, right? As you can see, the MACD is crossed, and look what's happened to the moving average. Now the moving average is crossed. Perfect. Perfect TA, right? So moving averages, RSI, MACD, that's all you need to know. Now, if you want to go a little bit further, you can also add what's called trend lines. This goes a little bit deeper, but all you need to do with trend lines, let's go to BTC, is when, so I'm going to show you a simple one actually, because trend lines, I can do a whole session just on trend lines. So when I was doing Bitcoin trading, all I was looking for was a break of 20k. Yeah, here. Why was I looking at a break of 20k? Because that was Bitcoin's last high in 2017. As soon as it broke that, just went parabolic. And it happened with BNB as well. It broke 40. As soon as it broke 40, where is it now? $700, $600. So in crypto, in a bull market, what happens is usually when you break an all-time high, you get what's called a blue sky movement, and that means that they don't know where the price could end up. And because crypto is so volatile, it moves so fast, it can honestly go to astronomical figures. Okay. Right, I'm going off the subject now. So keep these things in mind. Moving averages, RSI, MACD. Olive's mum, I hope things are clear. If they aren't, I'll be happy to do a personal session with you if you really want. Okay, that's it, guys. I'm going to grab another cup of tea. See you later.